Welcome everyone to HueFin News. Today is November 27, 2018. This is the home of the 2-minute price prediction, as well as giving you all the news according to the charts. We do appreciate you all coming and watch this video for today. If it's your first time coming though, make sure that you subscribe to this channel, like and share this content, because this is definitely something that is not available in or on YouTube. Okay, what we're going to do, we're going to read this article written by James Brumley about Apple, and as you can probably tell by the thumbnail, he feels that Apple stock has lower prices in store. And we're going to look at some of the facts, some of the statements that he has about this particular company, and then we're going to fact check it with the price chart. Okay, now I want to tell you all now, I don't care about what's being written in this article. My concern is if the price chart actually correlates with what he is writing. Okay, because here at this organization, we only focus on the price chart. That is our guide. That is where the truth is, and that is what we rely on. Okay, so what we do here as an organization is that we fact check everyone else who writes articles about companies to make sure if what they are writing is in fact correct or accurate according to the price chart. Okay, so without any further ado, let's go ahead and get started and look at some of the statements that James Brumley writes about Apple. The title reads, "This many analysts can't be wrong about Apple. The chorus of doubters has never been this in tune." Scroll down a little bit. You guys can see here in some of the highlighted portions I have highlighted. You can see that investors and diehard fans of Apple can spin and interpret the information however they want, but it won't change the reality of the matter that Apple has dropped price of about 20% since early November. For those of you who are well in tune with stock trading, 20% is a bear market. Okay, when the company announced that it will no longer disclose iPhone unit sale, that speaks volumes to all investors, because that is really Apple's main bread and butter. That's the argument from one side of the table, at least. Now, looking at this article, he's going to go into it to see if it's really a valid one. And not only is a valid one, it's a popular one. He goes on to write that there's 2 more analysts that just joined the growing bearish camp, lowering their view on Apple stock roughly in step with the fading pricing power of the once iconic device, the iPhone. There have been red flags ever since June of this year, 2018, and it's been waving for weeks, especially when Apple told the suppliers to trim their production components, meaning all the equipment, the components to make up the iPhone, trim it by 20% for the latter half of 2018. That already was a sign that has just increased within the last couple of months. After reporting no sales growth in terms of units last quarter, these are some of the companies who make the components for the iPhone: Qorvo and Lumentum Holdings, and a whole slew of other component suppliers all cautioned that demand was sagging. So already this is another red flag for this particular company, Apple, to let you all know that this particular company is dwindling in the demand of its iPhone. Foxconn, which actually assembles the iPhones, announced that it was planning to cut $2.9 billion in costs for 2019. Another red flag. Now, they didn't give a specific reason, but given their close relationship on how they build the iPhone, it's not hard to fill in the blanks. If the speculative math is on target, the company's initial plans to manufacture 70 million units of the iPhone XR has been pared back by about a third. So instead of 70 million iPhones, they plan on making around 47 million iPhones for 2019. Apple has only fanned the flames of worry by deciding not to give out their post-unit sales of the iPhones in its quarterly report, trying to suggest that that information is not important. But if it wasn't important now, then why were you giving it out previously? This is what they said. By Apple not disclosing the number of iPhone units that were sold within a given quarter, it has to reshape the analysts who cover this company. Analysts have, admittedly, this is what James writes. Analysts have jumped to the wrong conclusion about iPhone red flags before, but given those misguided conclusions, they were always back in line because Apple was simply giving their iPhone's unit sales along with the sale price of the phone, and they could get right back in line. Well, now they won't have that option to determine how many iPhones were sold, as well as the price for the phones being sold. Okay, looking at here's an analyst right here, Rod Hall. Okay, he's a Goldman Sachs analyst, and he's one of those doubters. Okay, for the third time in 1 month, he advocated a lower price target for Apple 3 times in 1 month. So anyone else who tells you that you can't readjust your estimation is wrong. We have Goldman Sachs, we have their analysts adjusting price targets more than 3 times in 1 month, and you would expect these individuals to be experts. Then I definitely don't want to hear no one else get upset or try to call out someone else because they was wrong on a particular stock. In addition to weakness in demand for Apple products in China and other emerging markets, it also looks like the balance of price and features in the iPhone XR may not have been well received by users outside the US. Don't nobody want the iPhone outside the US, as well as the price. No one is willing to pay an enormous price for the iPhone. Hall added that he sees material risk to March quarter guidance if current demand trends continue to play out. So again, he's forecasting the stock of Apple to move lower. Once we look at the price chart, you'll definitely see he is literally on par for his estimation. Since November 2nd, Goldman Sachs has lowered its price target on Apple stock all the way from $240 to $182, and it is currently trading at $174. That lower target follows a downgrade for Guggenheim Partners analyst Robert Chiara, who suggested iPhone sales by unit will fall 5% in the year that just got underway. Chiara added, however, that unlike last year, we do not see the average selling price increases providing enough offset with our forecast that blended iPhone average selling price increase only 3% year over year, leaving iPhone revenues negative 2% year over year. Here's another one. So you have Goldman Sachs, Guggenheim Partners, and now you can see you got Bank of America, Merrill Lynch downgraded Apple stock, as well as shortly after its early November earnings report, summing up the call with, we are incrementally concerned that not all the weakness is captured in the near term, and we are likely to see further negative estimates. It's an awful lot of analysts all saying the same thing, and we're only seeing the headlines about the high profile downgrades, but there are even more critics, analysts who are serving up that same bare notion for Apple stock. It's time to sell. That's what they're literally trying to tell us. Once we look at the price chart, we're going to see if the price chart is in line with what these analysts are in fact trying to insinuate from this article. Now, going down a little bit further, okay, James has to write, none of this is to suggest that Apple is doomed, because it isn't. But there is still risk to the value of Apple shares. Of course, Apple stock is an equity that largely been valued based on the company's ability to sell more and more iPhones at ever increasing prices. As Goldman Hall opinion, however, The laboratory of the market now points to Apple being at the limit of their price premium for the iPhone. So what they're saying is Apple has already reached its market point, its market share, from a price point to where they can't charge any more for the iPhone than what people are willing to pay. In our experience with mobile phones, this is what Hall is writing or saying. When pricing power is lost, consumer technology companies tend to either lose margins or market share or both. So the question that they're trying to figure out now is which one or both will Apple be losing? Are they going to be losing margin because they can't charge enough for their iPhones no more? Or will they be losing market share because competition will be able to compensate those who cannot afford the iPhone at those increasing prices, as well as offering the same technology the iPhone has? They will lose market share from that perspective as well. Okay, so that's what they're waiting on to see play out for the year 2019. Those aren't words shareholders want to hear, but given that more than half of Apple's business comes from its iPhone franchise, they are words shareholders need to think about. Seriously. So given the negative sentiment from this particular article, let's go ahead and dive right on into the price chart. It's not going to take that long. This is the monthly price chart for Apple. You can see on the monthly price chart that this is a dead giveaway, that weakness is still in store for Apple. Okay, I agree with James. I agree with the analysts at Guggenheim, Bank of America, Merrill Lynch, and even Goldman Sachs that weakness is still in the market for Apple. The first price target looks to be around 160, but again, as we go into 2019, 140, maybe even around $135 will be a key area of support for this particular stock. Looking at it on the weekly chart, you can see here on our ascension line that is drawn for Apple that last week it broke it to the downside. That is not a positive neither. It doesn't go on to say that just because it's broken our ascension line that it can't come back up to 180, maybe around 185 or so, but the trend is broken. Okay, the upside move that we've seen in Apple is broken from the weekly chart. The monthly chart is giving us a surefire indication of a push to go down bar. So again, Apple is definitely not a buy at this particular moment. The price chart is telling us that. The article is telling us that. We have analysts telling us that Apple is not a buy as well. So literally, we are in agreement with the price chart. We are in agreement with James Brumley, who wrote this article, and we are also in agreement with the analysts Goldman Sachs, Bank of America, Merrill Lynch, as well as Guggenheim Partners, that Apple definitely is not the opportunity to come in and try to buy it. But what do we know? Tell us your opinion. Tell us your comments. I know I've seen some other videos on YouTube that are literally telling Apple is a buy at this particular price. We do not see that here at this channel. So we definitely would like to know your perception, your thoughts about Apple. Do you think it's a buy at this particular price? Do you think it's going to continue to move lower? Just give us your analysis of what you think Apple is going to do going into 2019. We do appreciate you all watching our video. Make sure you all go ahead and subscribe and like the video as well too. Make sure you all maintain your profitability, and I will see you all later.